please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as suitors line up for Fortis Healthcare consolidation could emerge as the biggest game changer for India's private healthcare industry. However, the sector remains fragmented, with the organised sector taking up only 5 to 6% of the total market and the top 13 hospital chains constituting about 25% of the market. To add to that, the industry is facing regulatory headwinds and cost pressures, with states moving towards standardization of treatment rates and the NPPA imposing price caps. So will the economies of scale aid survival for some and growth for others? Is the current business model broken, and what could be done to repair it? We will attempt to answer all of that and more on this edition of Eye on India. Good evening. Thanks for joining us on CNBC TV18. I'm Shireen Bhan. To discuss those issues, joining me on the show today, Rajat Mehta, CEO and Managing Director of Max Healthcare, Pankaj Shani, CEO of Medanta, and Amit Gupta, Partner for Transaction Advisory Services at EY India. Gentlemen, appreciate you joining me on the show. Rajat, let me start by asking you. I'm not going to ask either of you or all three of you who is going to finally emerge as the winner for Fortis Healthcare. That's playing a poker game almost at this point in time, with the bids being revised practically every day. But let me ask you this. Is consolidation now a means to survival for the private healthcare industry?
Well, I think consolidation is not so much a means for survival. It's basically, if you're hedging your bets against growth or valuation or against geography or format, therever it comes in. However, it does yield lots of benefits in terms of synergies, efficiencies, asset sharing, clinician sharing, etc. So I think consolidation could be a way forward for efficiencies, but it's not a driver for merger or acquisitions, is the way I'd put it.
So what could be the triggers for possible M&A as far as you're concerned? I mean, you're trying to play consolidator today. Whether that changes tomorrow is a different story altogether. But today, as a potential consolidator, what is it that you would look for?
See, 3 or 4 things. One, growth. So obviously the balance sheet for everybody is stressed. The ROCEs are low. There's high capex.
Is it going to get worse before it starts to get better?
Could be. Therefore, you look at brownfield acquisition. That's the way to grow, and valuation. Second could be, interestingly, format consolidation. If you want to really play the density game, let's say in a geography, you want to look at secondary, tertiary, diagnostics, IT-based healthcare, and home care. That could be one more form of consolidation. Do format consolidation to be able to touch the customer in many ways.
Okay, so format consolidation, things could get worse before they get better. Pankaj, let me ask you, A, do you agree with the picture that's just been painted there? And two, what would it take for you, for instance, to look at possible M&A?
So I think the next 12 to 18 months will be volatile. I think that you will see a lot of challenges, a lot of headwinds. I think what you will find is eventually there will be some form of a flight to quality. People will start to understand where is the right kind of quality being delivered. The important thing to understand is, though, there's two very distinct types of healthcare delivery. A large part of it is actually unorganized, single doctor, really small nursing homes. And I think their consolidation will be not necessarily what we discuss in forums like this, but will happen because eventually you will find the people who are struggling will be weaned out of the system. I think on the bigger side, what you will find is that a lot of the consolidation that is happening today is either being driven by 2 things. One is a bunch of investors, typically financial investors, private equity investors, actually looking for where is the valuation coming from. The sector is going through challenges. There is a lot of headwinds. So private equity, other financial investors are looking for a way out. Consolidation is one of those ways. The second is you will find foreign companies, the likes of an IHH, looking to enter India. Rather than build from scratch, which is a challenging thing to do, the easy thing for them to do is acquire. So I do think that you will see some form of consolidation happening. I don't think it will change Indian healthcare drastically, though. I think it's going to be really just a drop in the ocean.
It'll be a drop in the ocean. So you're saying, A, that consolidation is likely to be driven by the need for exit, especially when it comes to private equity investors. And B, you feel that it's likely to be FDI that will drive the consolidation or the larger move towards consolidation?
I think for the most part, yes. And FDI could either be through private equity or through other investors, strategic investors coming in. I don't see a lot of appetite for local Indian investors to actually go very big on consolidation. And a large part of that is because they know that it's a challenging business to be in. A lot of the groups which have been traditionally in the south have started to move towards the north, but it's been a little bit more of a O&M type of model rather than a pure M&A type of model. You don't see too many groups from the north moving south. So I think that people are making tentative steps, but I think for the most part, the big M&A deals will actually be driven by investment from outside, either backed through private equity or through strategic investors.
Amit, let's look at the landscape today. Okay, we've discussed the fact that this continues to be an extremely fragmented business, with the largest share being in the unorganized space at this point in time. Even in terms of FDI, we've actually seen a decline between FY14 and FY17. Even in terms of M&A, that's the case. How do you read the landscape today?
So the way to think about this, as Pankaj just said, see the entire, first of all, the word consolidation in the industry is a misnomer. I don't think the industry has ever attempted a consolidation or will ever attempt a consolidation.
So what are they doing?
Just merging a few strategic assets.
Okay.
So the largest healthcare provider in the country, which is Apollo, he has almost like 7,000 beds, which is not even 1% of the bed capacity. That's the kind of industry we are talking about.
So it's not game changing?
It is not going to change any game. The way the landscape will change is probably one scheme which the government has introduced, which is this Modi Care. And that is where my view is that the new models of the healthcare delivery will emerge.
Okay.
Somebody who is not really into the low-cost delivery, right? My view is because the demand is paramount, is getting 50 crore people into the net of the healthcare, right?
Yeah.
Nothing of this has ever happened. That is going to create a massive demand. And that is where people who are the larger players who have actually not been even meeting those demands, they will get into this kind of a thing. And number two, the way it's not going to be greenfield or brownfield. My sense is a lot of these guys will probably go for acquisition in tier 2 cities.
Okay.
And that is what will drive a lot of M&A going forward.
Okay, you believe that Modi Care, or what is loosely termed Modi Care, could in fact be the next big trigger for possible M&A activity, as well as reinvention, so to speak, of the business model. Do you buy that argument today? Because, you know, while a lot of this looks like it's big on paper, the challenge is always in the execution, and that is where our capacity, both at the level of the state as well as the level of the private sector, has failed. What would your take be on the potential of Modi Care? Would it attract private investors or private healthcare players like Max and Medanta, for instance?
Well, as long as we get the pricing right, we'll be attracted.
At the rates at what we're currently hearing from the government, which is 1,200 rupees or so on and so forth. I mean, is that attractive?
Not as yet. But there are potential areas of collaboration. For example, on the entire manpower talent side, in terms of skilling people, very creative PPPs. Look at, capacity utilization through that. As I said, reasonable pricing. So there are areas of collaboration. I think the government also is thinking through implementation. There are active dialogues on with us. I think reality will emerge in a few months. I am still hopeful. It's an aspirational scheme. And each aspirational scheme has a oh my God component to it.
Sure.
And that's what's happening to us. But I think there will be some pragmatism as we go along in the implementation.
So, the shock and awe aspect of the scheme is the one that we're talking about. But let's move this scheme outside of the ambit for just a bit and talk about the need to reinvent the business model. Let me ask you about what are the top regulatory hurdles and challenges that you face today as a business.
So, for example, the entire potential CEA coming through.
For the benefit of our viewers who are watching, that's the Clinical Establishment Act. Yeah. So just to de-jargonize that for everybody who's watching, yes.
The pricing caps introduced by NPPA, for example, the recent, patient activism, etc., are coming in the way of giving quality care, So I think we're rethinking our models in terms of how do you...
Are you being forced to rethink the model because the government does not seem to be in the mood to let up?
Well, I think you can look at it either way. We're already on the way to transformation, given the changes in the landscape. So I think there'll be a change in formats. For example, I do see a very healthy uptick on care at home. Care is going home. Hospitals only becoming acute treatment centers, and a lot of daycare centers coming up, for example. A lot of technology is driving innovation as well, right, in terms of wearables, ICUs at home, etc. So I think there are several trends coming together. You can say that this trigger of NHPS or the regulatory action is maybe precipitating the issue. That could be right, but some of them are present earlier as well.
Key regulatory risks, and also what changes should we now expect as far as the business model is concerned? What changes should we expect in the pricing mix, for instance? Because I think the backlash from patients has really been on why are you charging us enormous amounts when it comes to consumables? Why should gloves be charged at 700% margin and so on and so forth? Are we now going to see a significant change in the way that the pricing models have existed, for instance?
So first of all, Shireen, I think it's important to understand that there's been a lot of hype about the pricing and what's happening in the private sector. I think that actually a huge disservice is being done to the public. People need to understand that India is actually one of the lowest cost destinations for delivery of care, especially of the kind of quality that we give. Of course, the challenge is that given our population, given the income statistics, it's still very unaffordable for a large part of the population. And this is something that we have to address, and the government is working actively towards doing that. So I think in general, I think the regulatory environment that is being put into the healthcare space, for the most part, is being done for the right reasons. Now, as Rajat said, it's all about can you execute this correctly. I think the industry will have to move towards an environment and a regime where prices are at a level which is reasonable and affordable. Now, what reasonable and affordable is up for debate.
And if we move towards a Clinical Establishment Act, which is what most states hopefully will move towards, then the government will virtually decide, right?
So the Clinical Establishments Act has various components to it. Some good, some slightly archaic. Don't forget, this act was enacted in 2010.
Sure.
It's 2018 now.
Sure.
A lot of the regulations that were foreseen at that point in time are archaic now. So the government also needs to come to terms and realize that there are some changes that need to be implemented in this act. However, in terms of the financing and the funding for this, I think, yes, we will move towards a regime where the government will try to make healthcare affordable for more and more people. The problem that we're facing is on pricing and tariff is only one small component. The biggest issue, Rajat mentioned some of the regulatory risks, but the biggest issue that we have today is where are the doctors? We don't have enough doctors, nurses, healthcare workers to actually provide the kind of healthcare that is required. And I think that one of the things that actually needs to be done in terms of regulation is actually look at the regulations in place for doctors, for nurses. I mean, we have some regulations which actually prohibit nurses from doing tasks which they're completely competent and trained to do, and the rest of the world allows them to do. But because of various regulations that we have, we are actually creating undue burden in terms of being able to provide resources that can actually help the public, actually help hospitals, help providers actually look at different business models. I think technology will play a big role in how we actually look at healthcare going forward. But I think, frankly, that was coming anyway. I don't think regulation is needed to push that. I think if you look around the world, healthcare delivery is being disrupted in many ways. And I think that that will come to India too. Will the government push it in terms of the pricing? Yes, for sure. That will accelerate it. I don't think that it is something that was not on its way. But I think that it's very much needed. This is
what is all of this going to mean in terms of the kind of capital requirements that this business has? I mean, you know, and I hate talking about ARPUs in the healthcare business, but that's the metric that people look at. What is this going to mean going forward if you're talking about innovation using technology, if you're talking about the different formats, etc.? What is it going to mean for margins? What is it going to mean for ARPUs going forward? Let me start by asking you, Pankaj.
So I think margins will come under stress. And this is why I said it's important to understand what it takes to actually deliver the kind of healthcare that we're talking about. We are already delivering amongst the cheapest in the world. When you look at the numbers that get thrown in the media or in the public about margin percentages, people don't seem to understand. You're talking about things where you actually need to then factor in what is the return on capital, what is it going to take to actually invest in the latest equipment. When you talk about EBITDA margins, don't forget that all that money has to go in the new equipment that you need for India to stay at the cutting edge of healthcare delivery. So it's not like when these numbers get thrown around, this is kind of the money that is going into the pockets of the private equity investors or some big business owner somewhere. The actual profit after tax margins are less than 5% for most of the big private chains. Now, when you look at the smaller people, some of these people are even struggling under the burden of interest and cash. I mean, a lot of the schemes, third-party schemes, the prices are 1/3 of what the market prices are. But even after that, the payments are not made. So you have this huge debt burden. This is one of the reasons why so many hospitals are actually struggling. So the economics that is the reality that the industry sees, and I think that the economics that is talked about in the media, there is a huge gap in actually what's the reality.
If there is a huge gap between the economics of the healthcare business in reality and what gets spoken about and the potential that gets talked about, A, how do we bridge that gap? And B, if this gap continues to widen as opposed to, the deficit being reduced, why would new investors, new money, new capital come in?
Yeah, I think it's a very pertinent question. And I think the ultimate measure of profiteering, as you call it, if you may, is the financial results the healthcare sector has. And there was a paper ENY did some time back which said healthcare sector in the ICU, right? So that's my response to your first question. I think you're very right. Why should anybody invest? I think the business model needs to be recomputed. So for example, actually in the hospital, you're running three models. You're running hospitality, you're running hospital and retail. Patient expectation will have to be reset in terms of relentless focus on clinical outcomes and patient safety, reasonable hospitality, and turnaround times. Optimization of manpower, doctor compensation, technology, all that will start to happen, including formats. I think that will take about 1 to 2 years of turbulence. Margins will be under pressure, but after 2 years, the model will emerge.
Okay. So 2 years more of turbulence, Amit, is that how you see it, or do you believe that it's going to take a while longer? And how much worse is the patient going to get before it starts to get better?
So I can't comment on whether it's 2 years or 5 years. I haven't really seen. Unfortunate part is most of the hospital operators that I have worked with have not shown the kind of agility to move very quickly. And probably that is the reason that some of these price caps are there today, because there was a particular way of pricing a package. So probably now there is a pressure on both sides. Clinical Establishment Act is pushing the capital cost up. The NPPA is putting the price caps down. So there is no alternative for the healthcare players but to move fast, be nimble now. So whether it's 2 years, 1 year, or 3 years, if they don't move fast, the survival will be a question.
Survival will be in question. So they are still in the ICU.
They are definitely, as Rajat said. We did a study which said return on capital employed in the healthcare sector for the 76 entities that we did was actually less than 7%. So which is like probably one of the lowest I've ever seen across any industries.
Okay.
PAT margins are 3%. So where will you reinvest that money?
Okay. So, well, those metrics don't sound very exciting. And as I said, it will question the investor appetite into this sector. ROC of about less than 7%, PAT margins of less than 3%. That's perhaps a somber note to take a break on. But when we return, we'll talk about what needs to be disrupted to ensure that the model that the private healthcare sector takes forward is in fact workable. That and more when we return on Eye on India. Don't go anywhere. Welcome back. You're watching Eye on India. We're discussing the future for the private healthcare industry in India. Status checks suggest that things are not looking particularly good on any of the economic parameters. In fact, if you take a look at the market cap of major hospitals, they've declined by an average of 8% since April 16. And we've seen trading multiples also contract. We've, of course, spoken about some of the regulatory headwinds before we took the break. Ranjit, let me ask you this now. We were talking about what needs to change, what do we need to fix in terms of the business model. You spoke about how the pricing mix is going to have to change. Formatting is going to have to change. But let's talk about some of the big costs. Doctors, what changes there?
I think we'll have to look at the model and look at models which are aligned to the interests of the patient and the organization. Certainly
in simple English, what does that mean?
Rationalization,
okay.
Right? You move to contribution share model or fee-for-service model. We have to relook all the models of doctor compensation. Manpower optimization, leverage technology, bots, robotics, God knows what all, to be able to look at ratios per bed. That will go through a change, as well. Standardizing procedures. Sometimes the cost of the same procedure varies between hospitals. So how do you standardize protocols to be able to get to a particular cost? So I think,
is there enough consensus and unity within the business to be able to move towards that?
As I said, the talent is so scarce. Unless the industry moves in tandem on doctor costs, one person can't make a difference. Because if I'm not willing to pay X, somebody else who's new in the business is willing to pay Y or X plus because he's got 4 years more to go. So as I was saying, the industry will have to move in tandem to be able to give affordable cost to the patient.
So how do we move towards changing the model? How do we bring in more affordability, more accessibility? What needs to change?
I think in a single word, transparency. I think transparency will be required throughout. And I think that will be transparency for patients, that will be transparency within the healthcare system, transparency across healthcare providers in the industry, between the healthcare providers and insurance, between healthcare providers and suppliers. Don't forget, healthcare is more than just hospitals. There's a huge ecosystem there. So I think that this will be one of the big things that will come in. And you're already starting to see this. Patients are becoming increasingly more empowered, much more knowledgeable, and that will be the way in which the industry moves. I think the other big game changer, in my opinion, would be technology. You're already starting to see it. So care being delivered remotely using things like telemedicine, skill shifting using technology. So what you needed a doctor to do with the benefits of technology, now a nurse can do, or a physician's assistant can do. So I think technology will be a big play. Rajat mentioned things like what do you really need to be in the hospital for? Can part of that care actually be delivered at home? So if you look at the average hospitalization for a patient of 3 days and say, can I actually make that 2 days? Because before surgery, I actually go into the patient's home and actually do a little workup, preoperative workup. After the patient is discharged, do I go back to the home, do a little workup?
How far are we from that?
We are already there. It is being practiced in Medanta. It is being practiced in many other hospitals. And not only that, you're actually starting to see an ecosystem of startups, of smaller companies actually being created to help in servicing this. So it's not that one big hospital is actually delivering the entire range of services. You're actually now starting to see many people coming together. And I think one of the big things that will be the way forward for providers will be partnerships. I think that no one hospital system will actually be able to deliver the entire continuum of care from health and wellness all the way till end of life. I think that you will now see a range of partners working to deliver that care.
So, Amit, if we see consolidation or we see partnerships being built or we see this ecosystem where you have players actually being aggregators, what is that going to mean in the possibility of economies of scale and being able to play on the economies of scale? Or as we pointed out at the start, that it's so fragmented that even if you do see consolidation, that's not really going to be a big trigger.
So from an economies of scale, practically there are only 1 or 2 areas where you can actually drive the economies of scale, and that is practically on the consumable side. Other than that, I don't think there are many economies of scale that will play out. But with the partnerships they are talking about, see, if I have to rationalize the cost, either I increase my occupancy so that the cost get rationalized over a larger base. So that is where technology comes in. Number 2, the largest cost, the doctors, Rajat has already spoken about, probably there will be rationalization in that. Number 3, on the consolidation, probably you will see some rationalization on the consumables cost as well. 4th area where probably the partnership can happen is, today an average cost per bed is almost 1 crore per bed.
1 crore per bed.
1 crore per bed. I think some of the larger players invest actually much larger than that as well. Hospitals don't need to invest in the land in the building. They will have to move away from that model. Probably there'll be a warm shell, cold shell kind of a model that will emerge where hospitals only invest in the technology or the equipments. And that will obviously lower down their costs and probably bring up their ROCs. That is something that I see probably happening forward.
Is that a real possibility? Does that sound like something that you're going to move towards?
Could be a possibility. O&Ms could be a possibility. I think partnerships with diagnostic firms could be a possibility. With equipment manufacturers could be a possibility. Also, I think we have to design to cost. If you can't afford 1 crore a bed, you have to think of 40 lakhs a bed. And therefore, focus on patient safety, equipment, clinical expertise, rather than the jazz, in the building.
Has there been too much jazz? Have we focused too much on the jazz in the private healthcare space? Is that one of the problems?
In some places, not all.
In some places, not all. And that you believe that course correction is already underway?
Already underway.
Okay. So let me then get concluding remarks from each of you. We've talked about everything that paints a rather grim picture at this point in time for the industry. But what gives you hope? What gives you confidence that we will be able to ride through this turbulence?
So I don't think it's doom and gloom. And that's my personal strong belief, because it's a supply constrained market. The demand ain't disappearing. We're not going to see 100,000 bedder coming up suddenly in the neighborhood, So I think there is demand. Unfortunately, a rising disease burden. And the duality of India is you have a oncology patient in Delhi as well as a dengue patient. So you have to look at, both spectrums. As I said, if you're able to sensibly rejig your models, around care, around patient safety, around optimization of various costs, there is a model that will eventually compute. It might take us 18, 24 months, but I'm quite hopeful that a winner will emerge.
What are shareholders, what are investors asking you today?
Exactly this same question, that, how will the business model compute? What's the model of the future? What are the strategic shifts one will have to make to be able to reach there? And that's work underway.
What are the questions that you're being asked today?
I think we're being asked much the same questions as what Rajat mentioned, that what is the future model? How do we look at this from a longer term point of view? For us, the most important question, and we've been fortunate, is what is the relentless focus on quality? And I think that this has been our single obsession at Medanta, that we have been just pushing quality, patient focus, patient care. Everything else tends to become second for us. And we've made decisions which may not be financially prudent in the interests of patient care or interests of medical quality. So I'm actually quite optimistic. I think that, the patient may be in the ICU, but we have exceptionally talented doctors in India. We have exceptionally talented healthcare workers in India. And I think actually we will ride out this bumpy times right now, but the future is very bright. We have a huge demand, a shortage of supply. And I think that you're finding a lot of young people still interested in becoming doctors, a lot of young people still interested in how can I use technology to disrupt healthcare, what can I do to make a difference. We get a lot of requests from people who are looking at this not because they want to make money out of this business, but because they want to do something good. And that gives me a lot of hope.
I agree.
Amit, I'll end with the money question with you, because at least from an investor's perspective, that's what they're going to be looking at. In light of everything that you've heard on this program, and of course the studies that you've done so far, how confident do you feel that we are going to see this new business model emerge?
So as they say, in every adversity there is an opportunity.
And necessity is the mother of invention, yes.
And the necessity is the mother of invention and innovation. So yes, my sense is, as both of these guys said, the demand is there. So that is not going anywhere. Supply is not so much. So from an investor perspective, at least they're not worried about one part. The only part they are worried about is whether you can optimize the model to deliver a low-cost healthcare. And I think they are confident, yes, there are turbulent times, the model will emerge. It may take 24 months, 36 months, but the investors are not running away at this point of time.
Okay, investors have patience, not running away just yet, but the model is broken, the model needs repair, it needs to be reinvented, and that's the hope that the industry is going to take the next steps towards that. Thanks very much to the three of you for joining us here on what has been a meaningful conversation on the state of India's private healthcare industry and the road ahead. With that, it is time for us to wrap up this edition on Eye on India. From all of us here, goodbye. Thanks for watching.